Hello, traders. This is Dave with the SPY Super System software and live options trading room, and I'm going to do a. It's going to be a fairly involved video tonight. We're going to be talking about the SPY Super System indicators and how to use them in your intraday trading as well as your swing trading. So we're going to go over those. We're going to look at a lot of charts, look at a lot of them in use, and I'm going to present it in a little different type format than I usually do. And I think it's to try to help folks uh, be able to use these indicators in conjunction with each other. So let's get started. Again, this is the SPY Super System software we're going to talk about. I also have a live trading room where we do options trading and some stock trading every day from market open to market close. I also have a text alert service, which you can join. And you can buy the SPY Super System software. We'll not going to talk about that tonight. I'm going to show you the software so you can see what it does. All right, first thing I have to do, of course, is the disclaimer. All signals and trading opportunities we provide here are for educational and demonstration purposes only. Trading is very risky, so you should never trade with more money than you can afford to lose. And neither myself or Right Line Trading are licensed financial advisors, so we won't be giving financial advice. All right, so the title of this is called The Market in Concert and Profits in Harmony. And you'll see as we get further into this why I'm calling this and what the point of it is. But this is the SPY Super System indicators and using them for intraday and swing trading. So we're going to cover these indicators and how we use them in conjunction with each other. All right. Now in the room and on the alert service, these are the strategies that we do. We have these swing strategies that we use, straight puts and straight calls, straddles and strangles, which are non-directional trades, debit spreads, usually weekly options expiration, time spreads over earnings. This is again another non-directional trade where we harvest implied volatility, crush when the earnings come out. Then I have another strategy called the weekly ATM strategy, where we sell puts against a neutral to bullish stock every week while holding a further out in time dated long put at a lower strike price to protect that position. And we do credit spreads. So this is basically the swing trades. These are when we do the alerts. These are what you'll see. These are the majority of the swing trades that we take. Now, as far as the intraday trades, this trades off of 5-minute charts. We have two major systems that we use: SPY Super System intraday strategies. We have the SPY Super System. These are for very high probability trades to catch the SPYs, the Q, the IWM futures, or even stocks. These would be trades that you take with in the money calls, in the money puts. And then we have another one that I developed last November called the UMCAT. This is also an intraday strategy using 5-minute charts. And UMCAT stands for out of the money catalyst. We take trades that have with out of the money puts and calls, and this is the only time you should use out of the money puts and calls. Only when they're constructed like this. Otherwise, you should always be using in the money puts and calls. These are for high momentum trades and high volume trades. Okay, so these are the two intraday trades that we take in the room. And I call these out, and I don't post them; they're too quick to post. But I do call them out in the room when I see them. And I have videos on all of these, so if you want to learn these particular strategies, if you become a member of the room, you'll get pretty detailed, about 30 videos on each one of the strategies we use. Both of these are included in there. All right, so this is what the SPY Super System looks like. These are our indicators. All right, and this is on Thinkorswim. It gets loaded on Thinkorswim where the indicators live, but it's you don't have to trade on Thinkorswim. I don't trade on Thinkorswim. I trade on Tradier, but you can trade on any platform you want. But this is where the indicators are loaded, and this is where you're going to see the setups that you should take. And this is where all the indicators that we use. Now this is a 5-minute chart here, so let's just kind of briefly go over the indicators. This down here is called the modified Laguerre. This is an oscillator, but it has the divergence stripped out. This shows just pure momentum. Now in this particular case, this is on a 5-minute chart, so this is showing the momentum on a 5-minute chart. You don't really need to have this because it's reflected up here in these other indicators that we're going to talk about here in a minute. And this basically goes between 0 and 100 and for bullish and bearish. Now, the current time frame momentum on a 5-minute chart, this is reflecting the momentum for the current time frame, which is 5 minutes. And you've got four colors here. You've got green and blue, which are bullish, and red and yellow, which are bearish. That's what tells you whether it's a bullish or bearish trade off the 5-minute chart. Now, the second one up here is called multi-time frame momentum. This is typically what we use for swing trades. When you're looking at a daily chart, you would be looking at the multi-time frame momentum and the current time frame momentum. And both of those need to be bullish or bearish. They don't have to be the same color, but they both need to be bullish or bearish. On a 5-minute chart, this is representing 5 minutes, 15 minutes, and 45. It's looking across those three time frames. On a daily chart, it's looking across 1 day, 3 day, and 9 day, right? And it's measuring the momentum, which gives us a very good understanding of whether the institutions are in these trades or not. The top one here is called the long-term trend. This I use on swing trades to see if I can line up the trade I'm taking to the longer-term trend. And if they match, it's to give you a more high probability, but they don't have to, right? Now up here on a 5-minute chart, and we're interested in the current time frame momentum on a 5-minute chart. This is what we use. I'm not using these other two on a 5-minute chart for the intraday trades. We've got three different levels here that we use for support resistance levels. First one here is the VWAP, volume weighted average price. It's a level that all the institutions use. Everybody should have them on their 5-minute charts, but not on your daily charts. This just goes on your 5-minute chart. Volume weighted average price, very, very critical. All the institutions use this for entries and exits, right? The second one is the 15 EMA, right here, this green line, which actually changes color. 15 EMA is exactly what it says. It's a 15 exponential moving average. And the white one right here is called the 8 exponential moving average. So these three levels are levels that if you're going to enter a trade, to get the best entry, you want to be entering when the price is close to the 8 EMA, the 50 EMA, 8 MEMA, or the VWAP. Those are our three entry levels. Those are the ones that we'll be talking about a lot about these and when we take trades. Okay, so that's really important. Now, one of the things here we also have, and I'm going to talk about these further as we get into the video here, though, are these candlesticks. Candlesticks typically are green and red. Red is bearish, green is bullish. But with the SPY Super System, we color the candlesticks that are bullish but high volume white. And we color the candlesticks that are high volume and bearish yellow. So these are very critical because these high volume candlesticks give you a pretty good overview of whether the institutions are coming into the trade and how hard they're coming in. If you've got high volume coming into a trade and it's you get the indicators down here telling you that you've got institutional involvement. So notice how this went from selling to buying right there, and it was on high volume. That's a very good indication of you could be taking an entry to a trade. And these are really important when it comes to the UMCAT strategies, which I'll talk about. These need to be colors for the out of the money. Anytime you're using out of the money puts, out of the money calls on a 5-minute chart, this is what you should be using. And you should not be using out of the money puts and calls on swing trades ever. Okay, always be using only on the intraday trades when they line up with high volume candlesticks. Right, so those are the major indicators. We all have something here called the market internals. Right, market internals tell us what the overall market is doing right now in a 5-minute chart. Not the stock we're looking at, like this is the SPY. This is not relating to the SPY. This is saying what's going on with the other 6,000 New York Stock Exchange stocks. It's a VOLD. It's called a VOLD, which is basically volume up, volume down. And it tells us that we have, in this particular case, we're up on green, which means we've got a lot more volume of stocks going up than we have stocks going down. So it gives you kind of an overall view of the market internals and what's happening within the market. Okay, so this is the SPY Super System. These are the indicators. This is what we're going to talk about in quite a bit of detail here today. Okay, now it's also important to understand that bullish high volume candles are white. Here it is right here. Here's amber. Right, this is actually a trade I took today. We're going to talk about this a little later, but you want to notice, see that candles that are white? That's high volume. That's high volume bullish candles right there. Notice down here, you've got a current time frame momentum that goes from selling to buying right there in that candle. That's where you would take the trade. That's where I took the trade today at amber. And this was a big, huge move in amber, by the way. And you notice we're getting right at the 8 exponential moving average with a high volume candle when the institutions will buy. Right? So you notice this, we're talking about a confluence of indicators here. right? So there's the high volume candles that are white, and here is your bearish high volume candles. These are yellow, bearish high volume candles, Futu. I took this trade today as well. This is Futu, bearish. You notice the institutions are selling the heck out of this thing, right? Red across the board, right? Breaking down below the 8, the 15, the VWAP, it's breaking down below all those with a high volume candle. That means the institutions are coming in bearish and they're coming in with some force, right? And the SPY super system also shows these little, in this case, blue arrows. These are called pop symbols that pop out of the box. This tells you that not only is it coming down with force, but it's also breaking out of compression, which gives you another clue that this is likely to be a pretty good trade. As you can see, this was a pretty good trade. It followed the 8 all the way down. Right, so there's your candlesticks, the colored candlesticks, yellow for bearish, white for bullish. Okay, and these will be on any time frame. If you're using daily, if you're using weekly, if you're using daily, they'll still be colored. The candlesticks will be colored based on high volume. Okay, all right. Now, this is a couple of trades I'm going to show you just to see how these work, and then we're going to go over a lot of this in a lot of detail here. This is an UMCAT trade. This is an out of the money catalyst, right? So this means this is on a 5-minute chart, and I'm taking this trade because there is a catalyst for this, and I'm going to use out of the money puts, right? Because this is Oracle. This is where I took it right here. All right, so it's selling off, right? You get red here. Here's the 8 exponential moving average, the white light. It's breaking down with high volume candles, right? And it's breaking just below the 8 exponential moving average and breaking out of compression. Perfect entry for this trade right here, right? Everything's lined up. The 8's below the 15, everything's below the VWAP. It's bearish. You've got a high volume candle and it's coming down. So I took it here and I get out right here as it starts the candlestick starts to get small. Notice it's still bullish, still bearish. I get in for $72 and out for $125 a contract. So that's 74% in a pretty short period of time. 5, 10, 15, 20, 20, 35 minutes, right, in that trade, right? And that is, we're taking it out of the money. And that's why we could get in so cheap, because I took a put that was well out of the money. It took a while for the stock to get to that price, but I can do it because under these circumstances of an UMCAT trade, I'm anticipating that it's going to be a pretty decent move because of the fact there's a lot of high volume coming into this. All right, so that's an UMCAT trade. This is another one here. It was on Frog. This was an extremely successful trade, and I choose this as an example all the time. This is a little extraordinary. You're not going to see this kind of move quite very often, but it does occur. And you can see right here again. Notice the institutions here are selling, then they go back to buying again, and then right here they go right back to selling again on yellow. And at the same point in time, we're getting a big yellow candle, high volume candle, breaking below the 8. This is where I took this trade right here. Right now, this stock was trading at about, at the time I took this trade, it was trading at about 45. I think I took a 39 put or a 40 put on this thing. It was way out of the money. So that's why I could get it so cheaply, $30 in, right? And I walked this down for, what's it, about 45, 50 minutes or something. And these candles kept coming down. This is moving quite a ways. It moved from about 45 down to about 37, 38 when I get out of the trade. So those $30 that I paid for those options, when I get out at $200 each, in at $30, out at $200. So for 10 contracts, which would have cost you $300, we produced a profit of $1,700. Now this is not common. Generally speaking, you're going to normally see somewhere between about 40 and 150% gains on these UMCAT trades, right? So there is a nice example of a nice UMCAT trade, and hopefully you can see what we're talking about, because I'm going to go into this, why we take these trades and when we take these, and what needs to be aligned for us to take these trades. All right, SPY Super System. This is just the logo for the SPY Super System, but where we're trading using the SPY Super System software to take a methodology called the SPY Super System that looks at, usually we take the trades in SPY-Q, IWM, futures, but you can also use it for stock trading, where it sets up the same exact way. And then there's the UMCAT trade. This is the logo for UMCAT, out of the money catalyst. Very, very successful, very, very profitable. Current current time frame momentum being 5 minutes. In other words, a day trade. These are fairly quick day trades, usually anywhere from 2 or 3 candles, maybe up to 6 or 7 5-minute candles. Those, it's called UMCAT. Okay, and just to kind of show you what the performance of this UMCAT's been, I started it in November 2025, and I did this because of the PDT rule I knew was going to change. The pattern day trader rule was going to change so that instead of having $25,000 in account, they're only going to be requiring $2,000 in an account. This opens up intraday trading to a lot more traders because PDT meant that you could only take 3 intraday trades in a 5-day period. So it kind of limited you. But this is the results I had through June 16th. I haven't updated it for the last half of June. But again, 533 trades I took. These are trades I took. Now remember, because I can't post these, but I can call them out. But I was testing out the strategy. 533 trades, winning trades 455, losing trades 78, 86% win rate, which is I've been maintaining that through the whole test on this. Profit factor 5.1, which is extremely high. If you don't know what a profit factor is, look it up. Go to Copilot or Gemini or one of the AIs and just say you're trading options. What is a profit factor of 1? What's a profit factor of 2? What does a profit factor of 5 relate to? This is extremely high. In this particular strategy, I was only putting $500 into a trade. And I could do that because generally speaking, I was using out of the money puts and out of the money calls. So they were relatively inexpensive. I probably had a couple that I had to spend more on because the option was like $6 or $7, but generally speaking, 500. And it produced a profit of $42,311 in that period of time. That's pretty good for $500 invested. All right, that just shows you what the UMCAT strategy is what can be done, but you have to learn it and you have to learn to trade it yourself. I mean, I can call out the trades, but you've got to be able to learn the strategy and know when to get in and when to get out. Because I obviously can't see them all. And again, I have a very detailed video on that. Okay. Now these are market overview notes. Now this is something I try to really talk about this every day in the room. We always have to be aware of market conditions for the day. This makes a huge difference as to which trade you're going to take, how much money you're going to put into a trade, how long you're going to stay in the trade. Basically, you've got trend days, bullish and bearish trending days, where the market generally goes in one direction all day long. This is where you're going to trade the best stocks trending with the market. If you've got a stock market that's trending up bullish, then you're going to basically look for the very best high probability long stocks that you can find and trade those. If it's going down, it's another trending day to the bearish side. You want to go with more of the bearish stocks that are good short setups, and trade those. That's going to give you the best likelihood of success. But you have to be able to understand with the market what's going on. And I talk about it in the room, but you're just going to look at the SPY and see what it's doing. Choppy days. This is most days, a lot of days. You're going to trade the best relative strength and relative weakness stocks. Now, that's not RSI. What that means is if the market is going sideways and down, and you've got a stock that's stacking green candles, in other words, it's bullish and going up, then that stock has relative strength. That becomes one of the better picks. You want to go long with relative strength stocks and short with relative weakness stocks. And you can trade both short and long stocks on a choppy day. Just find the best relative strength and best relative weakness stocks to trade. Again, it's not RSI. Don't confuse this with relative strength indicator. You're actually comparing what your stock's doing to what the SPY is doing, or the Qs. All right, so most days there's going to be high volume candles early. So from 9:30 on the open here in the East to 9:45, there's going to be a lot of high volume candles, as well as near the close. So the last 15, 20 minutes, there's going to be a lot of high volume candles. So high volume candles from 9:30 to 9:45 or so, they're not as effective as the ones that come in the middle of the day, because the ones in the middle of the day tell you a lot more than the ones in the morning. Because if you look at the volume of most stocks early in the day, there's going to be really high volume. So don't be misled into getting into those trades. And I would recommend not trading till after 9:45 in the morning, and not trading the last half an hour of the day, because you're going to get some indications of high volume that is everybody's getting high volume. All right. So again, it's best to wait till 15 minutes after the market opens and not trade a half an hour before it closes. Okay. So that's just kind of market overview notes, and it's very important to be aware of what the market's doing. Trend day, is it trending? Is it choppy? And I call it out in the room. I'll say it's an LPTE, low probability trading environment. That typically means it's a choppy day. All right. Here's the indicators that we're going to be talking about, or what we use. And These are going to be for intraday and swing trades. These are your intraday indicators to use. All right. Remember we said the SPY Super System current time frame momentum. This is the one we focus on. That was the bottom colored one, right? That goes green or blue and for long and red or yellow for short. SPY Super System current time frame momentum. Then you've got the VWAP, the volume weighted average price, a very key support level and resistance level. 8 exponential moving average, another key support and resistance level. The 15 EMA, another key support and resistance level. All of these can be used for entering and exiting trades. Then you want to look for high volume candles. This is really helpful. You don't have to take trades with high volume candles, but if you do take them, then you're able to take them out of the money. If you're taking them without high volume candles, but it's a good setup, then you would want to take in the money calls and in the money puts. And then you look for relative strength and relative weakness. These are what we're looking for on an intraday trade. Now, we obviously have to be aware of what the market's doing, as we said. We always have to be aware of that. But these are the indicators that we're going to be using for intraday trading, all right? UMCAT trades, SPY Super System trades, even any kind of short-term, you may be in for 2 or 3 hours or something on Tesla for a long or Microsoft for a short. You're going to be using these indicators right here. This is the whole array that you're going to use. Now, indicators for swing trading, right? These are the swing trading indicators to use, and I mentioned this already. The SPY Super System current time frame momentum and the SPY Super System multi-time frame momentum on a daily chart, right? A daily chart, they must agree. They must be both bullish or bearish. They don't have to be the same color, but they both have to be bullish or bearish, right? Both of them, right? And keep in mind, this is looking at the daily chart, right? Everything is being used with daily chart. Then on the daily chart, you always have to be aware of these 3 moving averages right here. These are simple moving averages. These don't appear in the 5-minute chart. These only appear in the daily chart. The 50 simple moving average, the 100 simple moving average, and the 200 simple moving average. Those are very key support resistance levels on the daily chart. And they're key because all the institutions use these. These are very, very important levels. So it's important to understand where they are, and they're gonna come into play on your swing trades, and I'm going to show you some of those. But you also use the 8 exponential moving average on the daily chart and the 15 exponential on the daily chart. Those 2 support resistance levels also come into play when you're doing a swing trade. All right, as far as getting into the trade, a lot of times if you can find a stock that's bouncing off the 8 or bouncing off the 15, it's a good place to enter a swing trade on the daily chart. Remember, you've got to be using the daily chart for swing trades. And then high volume candles, it's the same as on the 5-minute chart. High volume candles are very important. This lets us know whether the institutions are coming in on the daily chart, on the daily candle with force or not. You get a white candle on the daily chart that's bullish and it's moving up and it's white instead of green, it tells you the institutions are coming in with some force, right? And market trend. Which way is the market trending today, or the market trending overall? In other words, you're looking at the daily chart. Is this market bullish? Is it bearish? Or is it choppy? Because this is going to give you an indication of maybe how long you can stay in the swing trade, how big a size you can take in the swing trade. If you've got a nice trending market, which we don't have right now, if you have a nice high trending market, then you would get into the trade and maybe take a little larger position and plan on staying in it a little longer. If you get a choppy trade, a choppy one, then you're going to really cut back on your size and probably exit more quickly, right? So knowing what the market trend's doing are very important on these swing indicators, right? So these are all the swing indicators that we're going to look at. These are the ones you need to be aware of. Okay. Now, using these key indicators for intraday and swing trades. How to use the intraday indicators, all right? So let's talk about intraday trades. This is intraday trades. The SPY Super System current time frame momentum must be green or blue for longs. It must be green or blue for longs. If you're going long on a 5-minute chart, that current time frame momentum is going to be green or blue if you're going to take it long. Otherwise, please don't take it long. And it must be red or yellow for shorts if you're going to go short. Right? That's the color of that momentum indicator, the current time frame, the one on the bottom of the chart. Now, that's one thing. Okay, that tells you whether the institutions are in there long or short. Then you've got to look at the VWAP, the volume weighted average price. This is critical. That's a key support resistance level. If you're going to go long, the price must be above the VWAP. If you're going to go short, the price must be below the VWAP. Please don't take longs when the price is trading below the VWAP if it's heading up. There are cases when you can do this, all right? If the VWAP is far enough away to the upside that you can get a pretty good move to the upside to get to the VWAP. But again, when you do that, you're trading a stock that's weak because it's down below the VWAP and you're trading it long. So you are trading against the overall trend for that stock that day. But you can still do that occasionally, but I'm not going to cover that in this because it's a little bit too nuanced. And again, the price must be below the VWAP for shorts. This is a good way to let you know what's going on. Now, 8 EMA. This is also a key support resistance level. Now, this is really important if you're wondering what the trend is, right? When the 8 EMA is above the 15 EMA on a 5-minute chart, it's bullish. As a matter of fact, when the 8 is above the 15 on a daily chart, it's bullish. So if the 8 is above the 15 EMA, it's always bullish. If the 8 is below the 15 EMA, it's bearish. That tells you what the trend is. Really important to know what the trend is because you want to trade with the trend, obviously. All right, 15 EMA. Now this is something that not a lot of people are going to talk about, and I don't think a lot of people know about this. So that's why I put this as important. The second one is the 15 EMA. Okay, it's a secondary support resistance level to the 8. All right. So when the 15 EMA is below the 8, right, and that means that the trend is bullish, right? The 8 is above the 15. So when the 15 is below the 8, the trend is bullish. When the 15 is above the 8, the trend is bearish, right? Why is this important? This is important because when the price breaks below the 8 in an uptrend, in other words, the 8's above the 15. When the 8 breaks below the 15, when the price breaks below the 8 in an uptrend, the 15 EMA often acts as a support. It's basically a backup to the 8. So be careful not to exit trades when a stock breaks through the 8 and you still get the 15 below. And I'll show you some examples of this. This is something I always do. If the stock breaks below the 8, give it to the 15 because many times it's going to bounce off to the 15 and then head back up again. All right. And when the price breaks above the 8, this is in a bearish stock, in a downtrend, the 15 is going to act as resistance. So if it's coming through the 8 to the upside, and it's a short, and it looks like it's moving back up again and going to break out, don't get out when it goes above the 8. Wait to see if the 15 offers resistance, because a lot of times it'll just hit the 15 and reverse right back down again. All right, and this is something that again, I don't think this is something that an awful lot of people use. I use this, and I've had great success with this. I try to teach it, but please be aware of this because this is a fairly important concept right here that is really overlooked by most retail traders. Next thing, high volume candles. Bullish high volume candles are white. Bearish high volume candles are yellow. We've talked about this, all right? High volume candles can indicate strong institutional buying and selling, and you have to have high volume candles. That's what HVC stands for. You have to have high volume candles for an out of the money catalyst trade. When you're taking out of the money puts and out of the money calls for intraday trades, you've got to have high volume candles. Please don't take out of the money puts and calls on swing trades, right? Or day trades that you don't have high volume on, right? So this is the intraday indicators. This is something you're going to want to review, all right? Because this is important. It's something that most people don't even know or certainly overlook. All right, entering intraday trades, right? So these are quick trades, right? These are going to be trades off the 5-minute candlestick. There should be no nearby resistance above for a long or below for a short. It makes sense, right? But that means you also have to look at the daily chart because if you're going into an intraday trade on a 5-minute chart, you want to know in a daily chart, how close am I to the 50, the 100, or the 200 SMA? Are they in the way of my trade? If I want to go long a stock on an intraday trade, and I look at the daily chart and I see the stock is 10 cents away from the 200-day moving average, which is just above it, I don't want to take it. I don't have any room to the upside. So you've got to look at the daily chart and know where the 50, 100, and 200 are on the daily chart. That's really important for an intraday trade. Obviously, it's extremely important for a swing trade. Right, so that's the first thing you do. Look at your daily chart. Then you switch to your 5-minute chart. For intraday longs on a price break over the VWAP or over the 8 EMA, if the trend is bullish, that's where you would take it. A price breaks above the VWAP or breaks above the 8 EMA exponential moving average if the trend is bullish, which means the 8 has to be above the 15. You're going to enter intraday shorts on a price break below the VWAP, right? Or the 8 EMA if the trend is bearish. So again, the VWAP becomes your entrance for a short, or the 8 EMA becomes your entrance for a short if the trend is bearish, right? So you're just using the VWAP and the 8 exponential moving average here mainly for your entries for SPY intraday trades, SPY super system intraday trades. And that would be the case for whether you're doing in the money calls and puts or out of the money calls and puts. If you have an UMCAT trade, you're still following the same category, the same structure here of criteria, right? The VWAP or the 8 is where you're going to try to get in as close as possible to that, because you're basically getting in at support and getting in at resistance, which means if it goes against you, your loss is going to be minimized. And again, high volume candles on the break indicate strong institutional involvement and increase the probability of success, right? That's important, these high volume candles. If you see high volume candles, and I'm going to look at a bunch of charts to see that, this tells you that you get strong institutional involvement. It immediately gives you a higher probability of the trade working. Okay, these are entering intraday trades. Entering swing trades, get to use the daily chart. Please use the daily chart, right? You only use the 5-minute chart to try to get the best entry, but your daily chart is what you're going to use for entering the trade, and it should be what you use to get out of the trade. If you're taking a swing trade and you get you go a couple days out and you're still in the swing trade, don't be trying to analyze this by looking at every 5-minute candle, unless you're getting ready to get out of the trade. But if you're in the trade, wait to see where the candle looks like at the end of the day. If you get in on a daily chart, you should get out on a daily chart. If for an intraday trade, if you get in on a 5-minute chart, you should get out on a 5-minute chart. Right? Now, bounce, this is where you'll be taking entries into the swing trades. This is on the daily chart. A bounce up or down off the 8 EMA, the 15 EMA, the 50 SMA, the 100 SMA, or the 200 SMA. All these are major support resistance levels. All right. So many trades that we take, you'll have a stock that comes down, hits the 8 exponential moving average, and then bounces off of it and heads back up again. That's where you'd be entering. So you're looking to get in somewhere near the 8, the 15, or the 50, 100, or 200 on the simple moving averages. These are also important levels, and they can become entrance for you as well, right? And again, if it's going up to the 58 and coming down, then you would obviously go short, right? And breakout up or down from compression is another way you can enter on a swing trade. You're in a long compression and you break out of that, that becomes a potential entry. Breaking into a gap fill. If the stock has produced a gap on the daily chart and it's breaking into the gap, and it has to be into the gap, whether it's coming down or going up, it needs to go into the gap. Because remember, on a gap, if you've got a gap fill or a gap where you have a price is way up and then it falls down hard and creates a whole gap, that gap fill, the levels where it went into the gap and come out of the gap, those are support resistance levels. It must be into the gap and it has to stay in the gap. All right, we'll talk a little bit more about that. And then pullback opportunities, PBOs. That's where a stock moves up, comes back to the 8 or the 15, bounces off of it, heads up again, or the 50 or the 100 or the 200. All of these moving averages right here can be used for entries into swing trades. This is where you're going to get your best trades. In the room we talk about PBOs all the time. We have a huge number of PBO trades, pullback opportunities. Stock's bullish, it comes down, it touches the 8, it bounces up, it closes over the 8, you take it for a swing. Okay, so those are your entries on the daily chart for swing trades. Obviously, as we said before, you've got to have the current time frame and multi-time frame momentum on the SPY super system have to be green and blue for long, red or yellow for short. But we talked about that already. These will be once that condition's met. This is where you'd be looking to actually enter the trade. Okay. Now, entering swing longs on a price bouncing off the 8 or the 15 EMA. These are for longs, or the 50, 100, or 200. If the trend is bullish, if you're in a bullish trend, enter right again, bouncing off the 8, the 15, the 50, the 100, or the 200. Enter intraday trade short if the price is bouncing down from the 8, the 15, the 50, the 100, or the 200. Same thing. It's just they go up and touch them and move back down again. High volume candles on the break indicate strong institutional involvement, increase the probability of success, as they always do. And The stock should not be more than one average true range extended from the 8. If you've got a stock that's moved up quite a bit, and you look at the chart and you look at where the price is on the stock, and you look where the 8 exponential moving averages in your chart, you want to take a look at how far away the price on the stock is away from the 8, away from the 8 exponential moving average. So if you've got an ATR, let's say you got an ATR of $10, then you don't want that stock to be more than $15 away from the 8 exponential moving average. If it's $20, $25 away from the 8 exponential moving average, you're chasing it, right? You're chasing it. It's much more likely to come back because there's such a thing as reversion to the mean. When a stock gets extended from the 8, it's going to revert to the mean eventually. The mean is going to be the 8 exponential moving average. So don't be entering when you're more than one ATR. The stock may only have an ATR of 2, and maybe it's $4 from the 8. It's too high. It's too far away. You get 2 ATRs. It's too far. And never take swing trades over earnings. Please don't take swing trades over earnings. And listen, I hear about this all the time. How good if you get it right, you really make a lot of money. No, you don't, because the market makers have got the premiums and the options cranked up very high to protect themselves. They do that for a reason. They add volatility and they increase the price on the options, both the puts and the calls, to protect themselves. They're pricing the options based on where they think that stock is going to go, either up or down. And you have to be very, very wrong for you to make any money on that, because you're going to be paying too much for the options. Okay, so just as a rule, never take swing trades over earnings. Okay, now we move ahead here. For both intraday and swing trades, and a lot of reiterating a lot of this stuff, always be aware of where the closest support and resistance levels are. This is really important. In the room every day, people give me stocks they want me to look at. And the first thing I do is look at the daily chart, and then I look at the 5-minute chart. And it's amazing how many people don't look at the daily chart when they look at a trade. And they get the stock is right smack up against the 100-day, the 200-day, or the 50-day moving average. So just look at the daily chart. Make sure. Always be aware of the closest support resistance levels are. And that is on the daily chart, the 50, the 100, and the 200. On a 5-minute chart, it's your VWAP, the 8, and the 15. Right? Those are your support resistance levels. Right? So for intraday trades, the 50, the 100, and 200 on the daily chart are support resistance. So know these levels so you don't trade into them. Also, for intraday trades, the VWAP, the 8, and the 15 EMA on the 5-minute chart are support and resistance. Know where they are. Don't trade into them. Please know where your support resistance level is, because that tells you how much room you've got to where the trade's likely to stop. And you want to have enough room to the support or resistance level to make money on that trade. Right? For swing trades, the 50, the 100, and the 200 SMAs on the daily chart, as well as the 8 and 15 on the daily chart, are support and resistance. Those are your support and resistance levels. 50, 100, 200, 8, and 15. Breaks of support and resistance generally require high volume. So if you're looking for a break through resistance, in other words, if you've got let's say you've got the 50-day moving average above your trade, and this price is moving up to it, right? You're trying to decide whether you're going to stay in or to get out. For a stock to typically break through one of these major resistance levels on the way up, or break through one of these major support levels on the way down, you've got to have volume. It almost always needs volume. You've got to have institutions coming in there pushing it through there. So typically if I'm in a trade and I'm getting close to one of these levels, I'm pretty much going to take it off, or at least take part of it off. Okay. All right. Now, a couple of trades I want to talk about here. I've talked about this in the room, but some. But there's two kinds of trades. There's called anticipatory trades versus confirmation trades. Okay, what does this mean? And this can apply to both intraday and swing trades. A trade that is taken on an immediate break through support or resistance, the first candle that breaks through support or resistance, an initial compression break, are anticipatory trades. In other words, if you're breaking through support or resistance or breaking out of compression, and you take it on the first candle, whether that's a daily first candle or 5-minute first candle, these are anticipatory trades, meaning they are taken without a confirmation of the break. Because most trades will go back and test the breakout level and then bounce, and that would be a confirmation. But when you take the immediate break, that's called an anticipatory trade. Now, there's nothing wrong with this, but we've got to talk a little bit about this. A confirmation trade usually waits for a retest of support or resistance levels and enters on the follow through. Goes up through the 8, comes down, touches the 8, and then moves back up again. It's like a PBO, for example. All right, that would be a confirmation. Those are confirmation trades. Right, so you've got the two different kinds, and I've taken both, and everybody can take both. But here's what you want to be extremely aware of. Both of these trades are valid. All right. However, anticipatory trades will fail more often. A failed breakout or a failed breakdown. They're going to fail more often than a confirmation trade will. But when they work, the profits will be larger than the confirmation trades because you got in earlier. So that's the trade-off. So you've got to be ready when you take an anticipatory trade to get out of that thing pretty quick when it breaks down. Right? If it goes back and touches and then bounces, that's fine. But as soon as it breaks down through your support or breaks up through your resistance levels, you got to get out of the trade. So you got to be aware of that. But this is an anticipatory trade versus confirmation trades. And you can use them both. I mean, I use them. You be aware that if you get in early and it works, you're going to make more money than if you wait for the confirmation. But you're also going to have more failures on anticipation trades than you are in confirmation trades. Okay. This is now I'm going to go into something here that's called profits in harmony. And I'm going to call it the symphony trade. Now, the reason I'm doing this is I have so many people that trade who they seem to forget there's an awful lot of elements that go into finding a high probability trade. They'll use one or two indicators. Oh, look, this good. I got a bullish engulfing candle here, and I got the multi-time, the current time for momentum is green. I can go long here, right? So we're going to talk about profits in harmony. I want you to think about what a harmony trade is. What are we looking for to make a successful trade, the best ones, right? Indicators taken alone do not make a trade entry, right? One indicator by itself is not going to make a trade entry. Only using all the key indicators taken as a unit predict the high probability trade, and that's market trend, whether the momentum is in your favor, how much volume you get, where am I in relationship to support resistance levels, all those things. And I'm trying to put something together here to try to use an analogy to make that clear. And this, maybe some people won't like this, but I'm trying to put an analogy that will stick in your mind when you think about trading, all right? So only using all the key indicators as a unit predicts a high probability trade. Many traders will take trades with one or two indicators aligned. This is going to lead to way more losing trades. So I'm using a symphony orchestra as an example, right? No single instrument makes a symphony. Only all the instruments working in unison make a symphony, right? This is what we're looking for. We're looking for all the indicators in unison. One signal is noise. All signals aligned are a symphony, right? We want our trades to be a symphony. We're looking to take a trade that I'm going to call a symphony trade, right? And it's basically just the indicators aligned, but I'm trying to use an analogy to get this to stick in your mind as a way to know that you've got to be looking at a lot of different indicators, right? Okay, the symphony mindset. This is the symphony mindset. A great trade is not one loud instrument. It's the orchestra playing in perfect unison. This is what we're looking for, right? Our system is not about prediction. It's about listening to the market music, and entering when the orchestra is in harmony, right? And that's all our indicators, right? And again, I'm trying to make a point here that will stick with you, so you can think about basically like an orchestra is warming up when the indicators are just going back and forth or all over the place, and when they come together, you're going to hear this great symphony, this great music, and you know you've got a great trade when that happens. And I'm just trying to use an analogy to fix that in your mind. All right, so here's the trading symphony. We're going to go over a bunch of this stuff, but these are the things that I'm using for the symphony, right? You've got the SPY up here, like the brass. You've got support resistance levels. You've got VWAP right here, volume, trend, all of these things, and then harmony and confluence. This is the trading symphony, and I'm trying to make a point out of these things as far as I've assigned instruments to each particular indicator. All right, so the trading symphony framework. How a stock and option strategy mirrors a world-class orchestra. And this might seem hokey to some people, but this is one of the problems I see all the time is traders do not take everything into consideration. They just don't. They seem to want to rush into trades. They're not looking for the perfect trade setup. And this is a way to think about that. Think about if I'm taking a trade, am I hearing a symphony here, or is it more a bunch of cacophony sounds? All right. So a single indicator is like a single instrument, capable of sound, but not a symphony. A high probability trade is a symphony, multiple instruments, indicators playing in alignment, in rhythm, and in the same direction. Right? That's what we're looking for here. And I'm trying to come up with what I thought was a decent analogy of how to do this. And this is what came to mind. All right. So the strings, there's the violin, the strings. This is the trend indicators, the 8 EMA, the 15 EMA, the 50, the 100, the 200 SMA. These are the strings, right? So this is the trend indicators. Strings carry the emotional tone of the orchestra, right? Just like the EMAs and the SMAs, the structure carries the trend tone of the market. This is telling you what's going on. Here's the trend, right? It's smooth, it's directional, it's always present, and provides the melody of the trade. Those EMAs, very, very important, right? It's critical. And hopefully something like this, if you think about this, is going to make you think about these EMAs as more as just simple lines on your chart. All right, percussion. This is volume and high volume candles. Look at the drums, all right? Percussion, volume and high volume candles. Percussion drives the intensity and confirms the momentum. Volume spikes is like the drums being hit. High volume candlesticks, cymbal crashes, and institutional footprints, timpani rolls. This is basically, think about the percussion and the drums coming in. Where you got the EMAs lined up, and now the drums are coming in. Now you've got the high volume. Now you're getting some force here. When the percussion hits at the right moment, the move has force. Okay, the drums kind of tell you the move has got force, right? The brass. This is the SPY super system institutional indicators, current time frame momentum, and current time frame and multi-time frame on the daily chart. All right. So the brass is bold, it's powerful, it's unmistakable, just like institutional participation. SPY relative strength. Relative strength is very important. That's part of this as well. Institutional momentum and market-wide confirmation. That's what the SPY indicators are telling us. When the brass enters, the entire room feels it, just like when institutions step in, right? Next one is the woodwinds. This is the VWAP and the mean reversion levels, right? Very important here on the VWAP, especially on 5-minute charts. The woodwinds add balance subtly in structure, right? The VWAP is the tonal center. It's basically the center it's basically the jump off point for most trades, right? Is the VWAP. Reversion levels are harmonic stability. If it goes up too far away from the VWAP and then it comes back down, now the woodwinds come in again, and you're going to get the stability. They prevent the orchestra from sounding chaotic. VWAP prevents you from taking low quality trades, right? And that is the woodwinds. Now, I didn't put anything in here for voice, but the choir, the vocals, this is support and resistance level are the voices. All right, so the choir, the vocals when they come in, the support and resistance. The human voice is an emotional anchor. Support and resistance are the emotional anchor of price, right? You got to have some room to your support and resistance levels, or when you take the trade, you want to be bouncing off that. So breakouts is like a crescendo. This is like the voices coming in a crescendo. Rejections would be like a vocal cutoff. When it goes down, it's like the music stops. They stop singing. And retest is the harmony resolving. So it goes up, breaks out, it's a crescendo, goes back down. That's a rejection, vocal cutoff. Market bounces again, the harmony resolves you right back where you started, back into the trade again. When vocals align with the instruments, the momentum becomes unforgettable, right? And I know this might seem a little hokey, but this is what I'm trying to get people to think about when they're taking a trade. All of these pieces are so important to it, just like these instruments are to a symphony. I mean, they've all got to be playing in harmony, right? Now, section 3, this is harmony equals confluence. Again, symphony only works when the instruments play together. A high probability trade only forms when the trend, which is the strings, the volume, which is the percussion, the institutional confirmation, right? The current time frame momentum, multi-time frame momentum, when those are all together, and then the VWAP structure, right? You're above it for as long as you're below it for shorts. And the key levels, the vocals, those are your EMAs, your support resistance levels, all of them. All align in the same direction at the same moment with the same rhythm. This is the moment the orchestra hits perfect harmony and the trader hits a high probability trade. All of these things together. And this is a way I'm trying to to tie all these indicators together so you can see how important they are to be looking at the overall trade, right? Market trend, everything, all of these things together is what makes these good trades. That's why they're so hard to find all the time, right? And why, when you get into a trade, if you don't have all these into consideration, you're out of tune. You're out of tune. Okay. Now, section 4, the performance is the trade. Okay. So the opening movement, what we're looking for, the setup formation. The indicators start to align. The volume builds, right? We get high volume candles. The trend clears up. You've got a SPY that's moving up. You got a stock that's moving up. The SPY confirms. The essence, the SPY confirms that it's moving. Your current time frame momentum goes to bullish or to bearish. And then you have the main movement, entry trigger. When you enter in a high volume candle, it break or retest. In other words, you're breaking out or it compounds and bounces. Institutional confirmation, the current time frame momentum is, and the multi-time frame momentum for swings is both either bullish or bearish. And then the momentum ignition, which is a high volume candles in the pop in price, right? That's your entry trigger. And the final, this is when are we getting out of the trade? The tempo slows, the volume fades, the indicators diverge. Maybe you're getting too far away from the 8 exponential moving average. The 8's crossing the 15 coming down. The harmony breaks. Just like a conductor ends the piece at the right moment, the trader exits when the harmony dissolves, right? So this is kind of an overview of how to look at the indicators on the SPY Super System and how to use them, and think of them as an orchestra. I'm trying to give an analogy that in your mind you can actually picture what's going on here. And maybe when you go to take a trade and you see something out of whack, you'll think that music sounds terrible. Okay, we're not getting a nice symphony. Okay, the symphony mindset, again, I said this at the beginning, a great trade is not one loud instrument, not like a just one big bullish candle. It's a whole orchestra playing in perfect unison. You've got to have all these things lined up. And again, our system is not about prediction. We're not trying to predict here. It's about listening to the market music and entering when the orchestra is in harmony. That's what we're doing. Because people always ask me, what do I think the market's going to do? Why did the market do this? I don't care. I'm only looking for the perfect trade, or the best high probability trade I can find. And I'm looking to have as many of these things lined up as possible. And I know it's not easy, because sometimes you can wait a long time. But it's in your mind. What you want to do is, when you're looking at a trade, think, okay, these things all lined up the way I want. Okay, so we're going to look at some charts here, and I'm going to look at some live charts as well. This was Intel here. And again, here's what we're looking at. This is a 5-minute chart on Intel. Right, so here's the current time frame momentum down here. Right, you see the stock kind of compressing here. You see this high volume candle right here. Right, it's breaking out. This is where I should have taken the trade, but I didn't, because I missed it. Because you see why? It's too early. Right, it's 9:30 in the morning. So I wait, and I didn't take it. Here's where I took the trades. 10 o'clock. I've got more high volume candles. I still got high volume candles. And now I'm getting high volume, and I'm getting a break above the 15, the VWAP, and the 8. You notice the 8's above the VWAP, the 8's above the 15. Stock price is breaking over the VWAP. I take it right here, right? And this was a small trade. I didn't make a lot of money in this trade, but I want you to see the structure. Obviously, it's green here, right? We got current time frame momentum. We're breaking above this, the 8 with a high volume candle. We take it here, and I ride it up, and I get out right here. Notice it went right back to yellow again. Small gain, 13% profit, but that's the trend trade you're looking for. Okay, look at some more. This was a Netflix trade. This is where I get into Netflix, right? Here's current time frame momentum. Again, this is a 5-minute trade. Current time frame momentum right here. A little after 10 o'clock in the morning, I'm getting a break out of compression with the pink arrow here, right? I've got institutions in it. I've got a white candle. I got the institutions coming in with force. It's right on the 8. Right? It's above the VWAP. It's right on the 8. I take it right there. Right? Get in for 35 cents. And these are out of the money. I took out of the money. This was an UMCAT trade. You know, these are like trading at 96. I probably took like a 97 or 98 a call of this thing. And I wrote it up for about 9 or 10 candles and get out right here. I get in for $35 a contract and out for 70, right? To 100% profit. So, you know, 1,000 invested produced 1,000, 500 produced 500. That's the kind of trade you're looking for. Everything was in sync here, right? The VWAP was where we wanted to be. The 8 was above the 15. The market was green. The indicators were green down here. There was a green day on the market. I was trading bullish in a bullish market. That's what you want. Okay, this was, and I showed you this one. This is the Umcat on frog. Again, very bullish here, right? Blue goes to yellow. Indicators coming down, goes to yellow. I take it right here as it breaks below the 8 with a high volume candlestick. Perfect trade for Umcats because it's all high volume candles. Yellow candles all the way down. Huge gain. I mean, it's huge. This is, don't expect this all the time, but this was a huge gain, and there it is right there. Okay. Boom. This was on Meta. Now I didn't show where I get in and get out of this because I wanted to kind of talk about it a little bit. But it's like 10 o'clock here. So where I take this trade, see the 8 is below the 15, right? Here's the 15, the red line. Here's the 8, the white line. Here's the VWAP right here. This is where I would take the trade. As it breaks below the VWAP and the 8, breaks below both the 8 and the 15 with a high volume candle, I take it right there. And I'm going to use that 8 as my stop most likely. So I'm just follow it down. Notice red right here, right? Current time for momentum, selling. Institutions are selling the heck out of this. So I take this right down here. And then when I start to get this compression break and this move here to the side, I'm going to get out when it's compressing like that. And it went right back to blue, which I would have had to get out. In at 595, out at 945 on an Umcat trade, out of the money, 67% profit on that. Just so you see how some of these line up. And I remember, not all of these are going to work. Some of them are going to go against you, but you're trying to get into the very highest probability. And the more you got lined up, the more likely it is to work. All right. So we're going to look at some live charts. I'm going to go to some live charts on the Thinkorswim platform so that we can see the exact setup used for the SPY Super System, the Umcat trades, and the swing trades. All right. And again, we're going to use the indicators, the high volume candles on the 5-minute chart to identify the setups and the daily chart. Because again, this combination of high probability of high volume candles with breakouts above the VWAP or above the whatever a level you're using, this identifies not just when institutions are buying or selling a stock, but when they're buying or selling with major volume, right? And again, both of these systems produce a profit factor of over 4, the SPY Super System and the Umcat. All right, so let me bring up the platform, the Thinkorswim platform right here. All right, so here's Thinkorswim. Now this is live. I've got the ES up in here. First thing I want to do is I want to look at some daily charts first. I want to look at some potential swings. So let's where I usually find on potential swings is a couple of places. This current time frame momentum right up here. Once this thing gets rid of all of these nonsense, is I've got cascading up and cascading down. These cascading up and cascading down. Good heavens. When these cascading up and cascading down, I've got it set on daily. When I'm trying to do intraday trades, like Umcat trades, SPY Super System trades, I'll have this set to 5 minutes. But I'm going to switch to the daily chart, and I want to just look at some of these and see what we can see, right? So here's ELF, right? So here's ELF on a daily chart. What do we see here, right? Well, the current time frame and multi-time for momentum are green, right? Perfect. That means we can go bullish on this, or we can go long on this. Here's my moving averages on the daily chart. Here's the 100 right here. See how it just went above through the 100-day moving average? This happens to be the 50, this red line, right? So here's the 8 right here. See the 8? You see how the stock is bouncing off the 8 with high volume on ELF right there? It's been following the 8 up, and now I'm getting a high volume breakout here. That's a perfect entry for a potential swing on ELF tomorrow. If this, you're listening to this, it won't be tomorrow, but for the chart we're looking at here, this would be a perfect entry for a swing on ELF right here, right? So let's look at a couple more. We just randomly pick some here. And it doesn't have enough indicators here because it's not been around long enough. So we'll keep going down. Rivian, yes, here's Rivian, all right? Now, here's my moving averages right here. I got the 100 is the blue, the 200 is the purple here, and the red is 50. So it went through all the moving averages, right? But look at current time frame momentum, bullish. Multi-time frame momentum, still bearish. You can't take this trade. These do not align, right? Your harmony's out of tune here. You don't have these lined up, so I can't take that one. So that's how I look for these, right? This is a potential one. It's a potential one. I don't have a white candle, so I don't have as much confidence if I had a white as I would if I had a white candle. And here's COP right here. This one is getting some high volume candlesticks, and it looks good. You'd have to see how far you were extended on this. You'd have to look at the price and see how far it's extended from the 8. It's not. The 8 is right here. It's about $11, so it's only about $1 extended. So that's not bad, but that's a decent setup as well. Green across the board. It's above all your moving averages. You got nothing in the way of that, right? So let's take a look at some of the short side, right? Here's SOC. Big gap down today. This one you have to be careful of because you gap down a lot. It's kind of moving away from the 8, but you do have a high volume candle with a breakdown and you're below all the moving averages. Here's your 8 here. Here's your 15. The 8 is trading below the 15. It's a bearish trade. Okay. Mondelez. Mondelez is a pretty decent setup. Again, red, yellow, these are both bearish, so that's good, right? Your current time frame, multi-time frame momentum is set up bearish. You just went through the 200-day moving average, the purple line right here. So this is a pretty good setup for Mondelez, depending on how far it is away. If this is bearish tomorrow, I'd be interested in taking a short on that. Depending on what the market's doing, of course. If I had a strong market, I'd prefer to find the best longs. Is Wolf, right? Now see Wolf. We're breaking down. See the 8's coming through the 15, right? So the 8's below the 15, it's bearish. We got yellow here and yellow here, so it's bearish. But look at the 50-day moving average on the daily chart right there. That red line is the 50-day moving average. See how it touched it here? Touched it today. You don't want to touch this long short unless it gets through there and breaks down below that 50-day moving average. That's your SMA, right? Again, that's the key support resistance level. HPQ. Decent one here. Now we got red and red, right? Current time frame, multi-time frame momentum on the daily chart. That means the institutions are selling. They're not selling with huge force here, but they are breaking down below the 200-day moving average and the 50-day moving average. They just broke down below both of these major moving averages right here. So an entry tomorrow for short, at least for an intraday trade, is one I would consider. All right. And here's Dow. Can we take this? Sure. Look at it's red, red, red. You notice we're down below the 200, the purple line. The 8's sloping down, right? The 15 is sloping down. It's a bearish setup. It's not too far away from the 8. It doesn't have high volume, so it's not as good as if you had high volume. So that's how I find these on the charts. If I switch this back, these are some more down here. These are potential swing trades as well. It's ASML. Some of these are pretty extended right now, but LRCX, bullish, 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 breaking up here. Again, these are semiconductors, so they've been pretty long lately, pretty strong lately. Caterpillar, not a white candle here, right? It's still kind of a little choppy, and it's also very expensive. It's $1,000 stock, so that's going to cost some money. Clack with a nice move here as well. Right, so what I do if I'm looking for intraday trades, what I do is I switch this back to the 5-minute setup. Right, so I've got cascading up right here. That's the 5-minute. That's gonna populate with off the 5 minutes, and then I'm gonna change this to cascading down on the 5 minutes. Whoops, I think I just put the cascading up in the wrong place. Cascading up. I'll do the cascading down here. Cascading down. Okay. And that should populate here. Okay. So here's during the day, these are what we look for. Now you'd have to be looking at a 5-minute chart, and these are going to be at the end of the day. So it's a little hard to make a determination here. But if we just look at them and see what they look like, it's going to show you what you're getting here. In other words, you're getting a nice bullish move if this was intraday with high volume. That would be a place where you'd be, if it was in the middle of the day, you'd be likely to enter it, right? Poet, same thing. Institutions are buying. It's breaking above the 8. It's breaking above the 15. It's well above the VWAP. Nice little entry right there on Poet. UAA, same thing. CMG, nice move in CMG. Again, pretty nice big candle here. You've got to be careful about chasing these big candles. Typically, I'd be waiting because this is probably too far extended. But I have to look at that. I have to look at the next day and see. All right, and here we have RWT to the downside. Beautiful. This is a 5-minute chart during the middle of the day, and if you catch it right here because it comes up in the scanner, it's a perfect entry for a short. Right, AAOI, pretty big candle here, and it did break below the VWAP. You'd probably want to wait until this candle confirms. Typically, what I would recommend when you have these big candles like this is not to chase them, because I'd much rather have a few smaller candles in a row than a big one like that, because a lot of times that's algos just pushing in. It'll pull right back in just like this did. Okay, REPL, another decent short, right? Sell, got red, perfect, coming down. beautiful. Coming off the VWAP, you got nothing, no support below it. So that's what we look for on the current time frame momentum, multi-time frame momentum. Here's all your indicators. We went over these fairly detailed, I hope. I hope this helps. I hope this helps make you see when you're looking for a trade, a high probability trade setup, you want to get in the habit of looking for all those things we just talked about. All right. Look for that. Look for that orchestra. All right. Try to find the orchestra playing for you. All right. That's really important because it really is. This is what you're looking for. Looking for all these things to work together. Okay. All of these indicators working together so that you can do this the best way you can. This is basically your checklist of indicators that you need to have lined up for yourself to take these trades. And I've tried to go over them in detail and how to use them in conjunction with each other for swings and for day trades. This is really important here about the 8 and the 15 because that's a very, very important. In fact, I see if I can find one of those. I wanted to kind of cover one of those as well. All right, so let me look at it. Let me go to a 5-minute chart or daily chart. Let me see what I can find here. I'm gonna have to maybe make it be easier to find it on a daily chart. I'd have to find the, okay, there's a daily chart here. This is when it came through the 8 and the 15 did not hold. You find a lot of cases where the 15 does hold when it comes down through it. You see this case here, this is a short. You notice how it came up through the 8, hit the 15, which was pretty close to it, and then it rolled back over again down here. And then they can kind of converge. But a lot of times you'll get it, it'll go up to the 15 and it'll just turn around and come right back down again. So that's just a weird, I'm not sure I'm gonna be able to find a specific example here, but it happens all the time on these charts. You just want to be aware of it. You want to be aware of it. Yeah. All right. So I'm going to leave it there, and I hope this is was helpful for you to hopefully become a better trader. That's the whole point. So again, think of it as a symphony. Think of those instruments playing. Think how good it sounds when they're all playing in harmony, and how bad it sounds when something's out of tune. You don't want to be taking a trade that's out of tune. All right. So thank you, everybody. I appreciate that. I know this took a good long time, but let me know if you have any questions on it. I hope it helps. I hope it helps you become a better trader. That's the whole point of all of this. And again, have a trade well, and we'll see you in the room.